Good afternoon, everyone. I'm Saisha on behalf of Kirin Advisors. It's a pleasure to welcome you all to Investor Conclave Investor Connect Summit 2026, powered by Avinash Mentor and co-powered by Kirin Advisors. Today marks the first day of our two-day summit, featuring a powerful lineup of focused management meetings. This is the fourth interaction of the day with Rathi Steel and Power Limited. From the management side, we have with us Mr. Rajesh Jain as President Finance and Corporate Affairs. Hello, sir. Hello. Mr. Kushal Kumar Agarwal, AVP Growth and Strategy. Hello, sir.
Good afternoon. Hello.
From Avinash Mentor team, we have with us Miss Bhargavi. Hello. Good afternoon. With that, now I hand over the floor to Miss Bhargavi. Over to you. Before we start the session, let's have a quick overview about the company. Rathi Steel and Power Limited, incorporated in 1971, is engaged in the manufacturing of stainless steel and alloy steel long products. The company's product portfolio includes stainless steel billets, stainless steel wire rods, bright bars, and stainless steel rebars. It has also expanded in the carbon steel segment with TMT bars, including 550 or 550D grade, catering to real estate and infrastructure demand in North India. With that, now I hand over the floor to the management for a brief overview. Over to you, sir.
Thank you. Good afternoon, everyone. A warm welcome to all of you, and thank you for joining us at the Investor Connect Summit 2026. It's a pleasure to be here today and to have the opportunity to connect with the investors, analysts, and members of the financial community. We sincerely appreciate your interest in the Rathi Steel and Power Limited and look forward to sharing our business, our growth journey, and opportunities we see ahead. Rathi Steel is a company with a legacy of more than 5 decades in the Indian steel industry. Since our incorporation in 1971, we have built a strong reputation for quality, reliability, and manufacturing excellence under the trusted Rathi brand. Over the years, we have consistently evolved alongside the changing needs of the industry while remaining committed to disciplined execution, operational excellence, and long-term value creation. Today, our operations are anchored by an integrated manufacturing facility spread over approximately 12.5 acres in Ghaziabad, strategically located in National Capital Region, one of the India's largest infrastructure and construction markets. The facility has an installed steel melting capacity of approximately 85,000 tons per annum and a rolled product capacity of around 2 lakh tons per annum, providing us with a strong manufacturing base and significant headroom for future growth as capacity utilization improves. We manufacture stainless steel billets, stainless steel wire rods, premium TMT bars that can cater to our wide range of applications across infrastructure, residential construction, engineering, and manufacturing. Our stainless steel products serve industrial customers across multiple sectors, while our TMT business has built a strong presence across the NCR and Northern Indian market through an established dealer network and long-standing relationship with leading real estate developers and infrastructure companies. The strength of Rathi brand, coupled with our strategic location and manufacturing capabilities, continues to position us as a trusted supplier in our key markets. One of the defining strengths of our business is our continuous focus on technology-led manufacturing and operational efficiencies. We are proud to be India's first and only stainless steel wire rod manufacturer to have successfully implemented direct charging of hot billets, where the hot billets are transferred directly from steel melting shop to rolling mill without reheating. This process improves thermal efficiency, reduces fuel consumption, lower conversion costs, and supports more sustainable manufacturing. Building on its success, we are now implementing the same technology in our TMT operations, which we believe will further strengthen our operational efficiencies and cost competitiveness in the years ahead. Another improvement strength of our business is the significant capacity available within our existing operations. Both our steel melting shop and rolling mill are currently operating at a nearly half of their installed capacity, providing us the substantial room to increase production and improve operational leverage. This allows us to pursue growth by making better use of our existing assets while continuing to invest in modernization and debottlenecking initiatives. The outlook for Indian steel industry remains encouraging. Continued investments in infrastructure, highways, railways, urban development, manufacturing, and renewable energy are supporting long-term demand for quality steel products. At the same time, customers are increasingly seeking suppliers who can combine consistent product quality with efficient and sustainable manufacturing. We believe these industry trends create a favorable environment for companies with established brands, strong manufacturing capabilities, and disciplined execution. Sustainability has become an integral part of our long-term strategy. Today, more than one-fourth of our overall power consumption is sourced from renewable energy under the open access model. We are also received recently prestigious Green Pro Type 1 Eco Label certification from the Confederation of Indian Industry for our Rathi Biotech FE550 grade TMT bars. As the adoption of green building standards continue to grow, we believe our focus on responsible manufacturing while will strengthen our position among institutional customers and infrastructure projects. Over the past 2 years, we have remained focused on strengthening the fundamentals of our business. The success restart of our TMT rolling mill, the revival of our dealer network, investments in modernization and debottlenecking, and our continued emphasis on operational discipline have laid a strong foundation for the next phase of our journey. At the same time, we remain committed to increasing the contribution of value-added products, improving manufacturing efficiencies, and delivering sustainable long-term value for all our stakeholders. I am also pleased to share that FY26 has been a year of strong operational progress for the company. We reported total income of approximately 716 crores, reflecting a healthy year-on-year growth of about 42%, while profit after tax increased to approximately 12.9 crores, demonstrating the positive impact of improved operating performance and disciplined execution. With a trusted brand, strategically located manufacturing facilities, strong technical capabilities, significant available capacity, and favorable industry tailwinds, we believe Rathi Steel and Power is well positioned to build on its strength and create sustainable value over the long term. Once again, I would like to thank you, each one of you, for taking the time to join us today. We truly appreciate your continued interest in the Rathi Steel and Power Limited, and we look forward to an engaging and insightful discussion. Thank you. Now we can open the floor for questions.
Investors, now floor is open for Q&A. You can raise your hand or you can drop your question in the chat box. So we have one question in the chat box. ED Raipur have 3.59% stake. What is the full story?
ED Raipur.
Yes.
Okay. रायपुर कहाँ से आ गया? नहीं ईडी रायपुर में किया होगा नहीं. Okay.
Actually, in the past, when we have allotted a share in the preferential allotment, we have allotted share to the various investor companies and uh, preferential buyers. So that 3.15, those share, those number of shares, those were seized by the ED. It is nothing to do with the company. It is the matter of the ED and that particular investor.
Vaibhav sir, please go ahead. You can ask your question.
Yeah, so I was just looking at your previous financial statements, and I'm seeing losses, and there's a change, after. So if you could just explain that, what happened in this time period of, this losses and coming out of that and selling of assets. If you can explain what happened in that.
I'll give you a brief about it.
Yeah.
As you are aware that in 2009-10 there was a ban on mining by the government. So which resulted in a lot of mines got banned for mining, and there were there were very little minings which were operating, and too many players chasing too little quantity of iron ore and coal. So that time, our Odisha unit, which is a which is a very capital intensive unit, we faced a lot of problems in that unit with respect to raw material procurement and selling finished goods. So we did a lot of losses in that unit, and that resulted in having a stress on the Ghaziabad unit also. Though Ghaziabad unit is a conversion unit, but that cash flows of Ghaziabad unit were going into Odisha unit, and that resulted in overall company getting stressed. So we did CDR also, but CDR also got failed for the simple reason that all the lenders did not adhere to the CDR. So thereafter, some of the lenders assigned the debt to ARCs. We did structuring with the ARCs, and we paid them as per the schedule. We did OTS with one or two banks, and then we paid as per the OTS terms. And now the company is back on track. And we in 2024 April we restarted the banking operation with Kotak Mahindra Bank, and the company is doing fairly well.
Okay, so can you just tell me what were the assets that got sold during that time, and little bit about what were the terms of the ARC?
The ARC terms were they wanted a particular IRR which we paid on the restructure terms.
Okay. And what are
And
the assets?
assets, the Odisha unit was sold off, and all the proceeds were given to the lenders.
Okay, and
They
what
are
was the value of the sale for the Odisha unit?
that I am not aware, because it was sold by Odisha, by ARC only.
Yeah, but as per the agreement, they must have so they just took over it against the outstanding loans, and whatever they sold is their discretion. Is that what you're saying?
Yeah. They sold off
Okay.
under
So what was the
the
loan amount outstanding for which they made this? They seized this asset and they did the sale.
the total loan of the company that time was around 590 crores,
Okay.
uh, which was related to both Ghaziabad and Odisha,
Okay.
and all the lenders were sharing pari passu charge on both the units.
Okay.
So they sold off the asset, and they adjusted the debt,
Okay.
and thereafter for balance amount we did restructuring with them.
So,
And as on March 24, the company was debt-free company.
and right now only the Ghaziabad unit is with you all, right?
Yes.
Okay. Uh, and if you can just tell me that if this Ghaziabad unit, what will be the current replacement cost of this asset? You can give some idea there.
At Ghaziabad, the unit is located in NCR region. So land cost is, if you want to put up a plant in NCR region, first, first
I'm
you
not.
don't.
I'm only talking about the plant, not the land. You can give me a breakup between the two. That would also be helpful.
If you talk of the land, plant machinery and all, so it will be somewhere around 300 to 350 crores approximately of the same
Okay.
size. Hello.
Okay. And the land value. What do you think is the realizable value there?
Can you come again?
I said, what do you think would be the realizable value for the land today?
I've never thought of knowing it because it's a running
You don't
unit.
plan to sell it.
It's a running unit.
Yeah, yeah, but you, like you said, it's coming in city area, so it's only a question of time where,
Now,
probably if the
now,
values become quite rich, it
but
can be an
now you have
option for the firm,
now,
right?
now you have given me an idea, so I'll definitely look into it.
All right, thank you.
Thank you.
Yeah, I'll just join myself back in the queue. Thank you.
Right.
We have a question in the chat box. What is the current revenue contribution from billets, stainless steel wire rods, TMT bars, and flat products? And how do you expect this product mix to evolve over the next 2 to 3 years?
Good afternoon. Billet is an intermediary product, and we don't sell. As far as our final product is TMT and wire rod, and the combination will be somewhere around 60-40. Wire rod will be around 60% and TMT wire will be 40%. Because there is always a. I'm talking of in terms of volume. So it will be like that only in the times to come.
Investors, you can raise your hand or you can drop your question in the chat box. So we have next question. The company has recently announced a successful completion of hot charging of mild steel billets for manufacturing MSTMT rebars. What are expected cost per ton savings and operational efficiencies following full-scale commercialization of this technology?
Good afternoon. The proposed project is under implementation, and we are, of course, doing it. And the main thing is what we, after implementing it, we will save on account of fuel and scaling loss, which will be around, you can say, about 1.5 to 2 rupees a ton. Apart from it, we also reduce the carbon footprint. But this saving is for the billet which we manufacture at our unit only. The purchased billet from outside, it will incur the same cost as doing today.
Yes, yes, Kishore sir. Kishore sir, you can go ahead.
Am I audible?
Yes, sir.
Yes.
Okay, great. So first of all, thank you so much for conducting such a transparent, communication in this event. And I would like to have a couple of questions. See, there is a lot of competition in terms of finished good prices for the TMT specifically, and you have got a big brand name, to my understanding, over a period of time about Delhi and NCR. So, what is your distribution engagement strategy? And second is about the digitization over there. Are we creating a digital model of onboarding the distribution at the same time, rewarding these people and building the business, having the last mile visibility so that the overall business mode can be derived?
Uh, Good afternoon, Kishorji. Presently, as you saw the numbers, the production is, we are doing our marketing through our distribution channel only and not through digitalization. However, we have started using digital platform. We are also in the process of expanding our product portfolio, as well as enhancing the capacity utilization, and definitely after maybe a year or so, we will start the digital marketing also.
Okay, great. And what kind of margins do you expect between wire rod as well as the TMT, the gross margins?
In terms of beta percentage wise, we can say around
it all depends on the market conditions, the demand scenario.
Okay.
There are so many factors. Last quarter we faced problem on account of war and all, so that result is about to come. So EBITDA will be, we are secondary producer, and we cannot compare our EBITDA with the primary producers.
Correct.
Right. So our EBITDA will be somewhere around 5 to 6% in wire rod and 2 to 2.5% in TMT.
And what would be the full year guidance if you would like to share for the year 27?
We have so many times told that we will grow at CAGR of 20%, subject to market conditions.
And okay, and last one from my side, sir, is there any specific reason for 50%, 55% capacity utilization? Because I could see that there is a 2 lakh capacity which is there, and you also said during this conversation that there is a headroom for 50% growth over there because of the unutilized capacity. Is there any specific reason for that?
No, there's no specific reason. Rather, if you have seen my TMT mill, we restarted in April 25 only.
Okay.
And now we are in the process of increasing our capacity utilization, but everything depends on the market conditions, the demand scenario.
Okay, and are there any capex planned in next 1 to 3 years of time frame?
No, except the normal capex, there is no plan for any capacity expansion part. The normal capex is always there in the steel industry.
Okay, sir. And are you willing to raise any further equity money anytime soon?
Not immediately.
Okay, thank you so much for your time.
Thank you.
Thank you, sir. So we have next question in the chat box. Who are the primary buyers of your stainless steel wire, and which end use industries contribute the most to demand?
Good afternoon. Our product is not stainless steel wire. We manufacture only stainless steel wire rod. SS wire rod is further drawn into wires by our vendors. So there are various application of SS wire rod, including households, including for bright bars and drawing into wires, and it has various application, including engineering sector, in automobile sector. So there are various wires, and not like this key. And majorly we sold our wire rod through our distribution channel.
Investors, you can raise your hand or you can drop your question in the chat box. What has been the response from customers after obtaining the Green Pro certification? Have you seen any improvement in inquiries or order conversions?
Green Pro certification is, it is a gradually growing demand. Those projects which are approved for the green projects, that project only mandatory requires the Green Pro certification. And yes, there are few builders and customers which need only Green Pro certification rebars. And of course, the demand is growing gradually, and it will take time. But soon, the demand for Green Pro product is, of course, it will expand Further, all the government projects require Green Pro certification or the green steel.
So what is the average credit period provided to customers? Trade receivable increased from around 24 crore to 56 crore in FY26. What were the key reasons for this increase?
Last year, it means 24-25, we were operating with only one product. And in 2025-26, we operated with two products, wire rod and TMT bar. So, and the average credit period in steel industry is between 30 to 60 days, depending on the customer relationship. So, our debtors are very much within that range only.
Has the company made any progress on the rooftop solar project, and when do we expect implementation to begin?
Yes, we have already engaged, discussed and engaged the consultant for the same, and we have also got the detailed report for the rooftop solar project. And we expect to initiate the project after the monsoons.
Investors, you can raise your hand or you can drop your question in the chat box. So, without sharing specific numbers, can you comment on how Q1 FY26-27 has progressed compared to Q4 FY26?
It is very difficult to say, but will definitely be better than corresponding quarter of 25-26.
Hi, this is Kishore. I'm looking forward to meet you people in person to discuss some business proposition as per your convenience. Kindly suggest.
Kishorji, you can anytime drop an email at our email ID investors@rathisteelandpower.com,
And then we'll connect.
and then we will connect and discuss it.
Kishore sir, you can connect with us. So next question, are you evaluating any new product categories beyond your existing portfolio?
Currently, we want to focus on what is our existing portfolio, and our main focus is on implementing the hot charging of TMT bars. Thereafter, of course, we can our team can discuss, and if required, we can think over it.
Large integrated steel companies have much larger capacities and stronger balance sheets. Where do you believe Rathi has competitive advantage that allows it to win business consistently?
Rathi is a 1971 established company, and yes, large integrated steel companies, they are all captive with raw materials also, but we are secondary producer and we are not captive with any raw material. So we have a competitive advantage over large producers, both in terms of value and and meeting the customer demands on just-in-time basis. So we are in an advantageous position as far as NCR is concerned, because all the large producers, they have their depots in and around Delhi, but we have our manufacturing facilities in and around Delhi, and we are able to meet the customer's demand on just-in-time basis. And our realization is also lesser than the large integrated players.
Has the company made any progress in refinancing its existing borrowings at lower interest cost?
Yes, of course, we are trying, and we are working with the existing bankers as well as exploring facilities from new banks, so that the overall finance cost can be bring down to the sustainable level, to the market rate.
Has the company made any progress? Sorry, okay, it has been answered. What is your current inventory holding period in days, and what is the value of inventory on the balance sheet?
Current inventory period is ranges from 21 to 30 days. And as on March 26, the inventories were to the tune of around 56 crores on a sales volume of around 715 crores. So it's between that range only.
Are you evaluating any new product categories beyond your existing portfolio?
It is also already answered, I think.
Okay. Where are your products primarily sold today, and how is revenue distributed across different regions?
We are operating mainly in the NCR and northern part. So the all revenue came mainly from the NCR region only. And for the SS product, we have few markets in Gujarat or Rajasthan or in Maharashtra. But majorly and our product is sold in North India. For the TMT
How,
rebars, because of the logistic cost, it is not possible to sell the TMT rebars beyond 250 or 300 kilometers.
how much annual maintenance capex is required to sustain the existing manufacturing facilities?
Very difficult to say, but it all depends on the equipment condition and a lot of other factors. But it will be somewhere, but in any case, it will be somewhere in the range of 10 to 15 crores.
Investors? Yes, Ms. Bhargavi, please go ahead. Sir, I need your response on couple of earnings related questions.
Yes, please go ahead.
For the full year FY26, your annual income witnessed robust growth of over 41.7% YOY to rupees 716.49 crore. However, your annual net profit margins contracted compared to the previous year due to higher expenses. Could you detail the specific raw material and fuel cost pressures that offset your strong top line gains? And
No.
what steps are being taken to stabilize annual margin?
When we compare the results of FY26 with FY25, in FY25 there was only one product which we were selling, that was wire rod, stainless steel wire rod, where the EBITDA margins are always higher. But in 2026 we restarted our rolling mill also. Rolling mill means TMT rebars, which has got a lower EBITDA margin. So if anyone has to average out the EBITDA margins of wire rod and rolling mill together. So that is the only reason there is a slight decline in the margins, but overall the reason is this only, that there were combination of two products. That's all.
Okay, sir, thank you. Investors, you can raise your hand or you can drop your question in the chat box. So we have question. 5 years from now, where do you see Rathi Steel?
We expect to grow at a CAGR of 20%, subject to market conditions, and that's all. This is what we can say as of right now.
You have become virtually debt-free and also raised capital recently. How do you plan to balance future capex?
For any future normal capex we'll be doing from the internal accruals, but for any capex related to capacity enhancement and all, we'll definitely be approaching the lenders for filling the portion for filling their portion, and promoters or the shareholders will bring in their portion. So it will be a judicious mix of debt and equity.
What are your growth objectives? Are we looking for organic or inorganic growth targets? Can you provide insight on your growth roadmap 2 to 3 years down in the line, please?
We are presently focusing on our existing product portfolio, and our prime focus is to reduce the manufacturing cost of the existing product. We are planning or our roadmap. I mean, we expect to grow at a CAGR of about 20% per annum, and the same is we do expect for the next 2 to 3 years.
Yes, Ms. Bhargavi. Sir, in the last con call, you mentioned that your borrowing cost is around 16%. Why so?
That's because that the past was very bad. So, but in spite of that, in company kept growth momentum, and new banks came in, and they gave us borrowings also, but that was a little bit higher cost. But now we are making all efforts to bring it down drastically at the market level.
All right, sir. Also, why are OFS negative? Any initiative to improve this ahead?
OFS means
Oh,
the
sorry.
NWC,
OCFC.
NWC basically.
Yes, sir.
NWC. So it's negative for the simple reason that in the last 4 or 5 years, I paid good amount of I met good amount of obligations for meeting the debt repayments of ARCs, OTS settlement and all, and my creditors got stressed. And but we are making all efforts to make it positive in the times to come.
All right, sir. Thank you. I think we have covered most of the question. Investors, do we have further questions? If we have no further questions, shall we conclude the meeting?
Yes.
Thank you, sir. Thank you, everyone, for your time and participation. If you have any further queries, you can reach out to us at research@kirinadvisors.com. Thank you. Have a wonderful day, everyone.
Thank you,
so
Thank you,
investors.
much.
Thank
sir.
you, everybody.
Mhm.